I have been impressed with the urgency of doing. Knowing is not enough. We must apply. Being willing is not enough. We must do. Leonardo da Vinci. And Leonardo was right. We talk about it here on the channel every single day. The urgency of doing. 10 to 15 minutes a day following these stock charts. Not simply knowing, but applying. We have to be willing to do the work. And the work is 10 to 15 minutes a day charting these markets and practice trading. That's what it's all about. That's the only way you're going to learn the nuances, and nobody can or will do this for you. It's totally up to you. You can choose to do the work or not do the work. And if you like the sound of my voice, enjoy, because that's all you're going to get out of it. If you want to get all of it, then spend the time, put in the work, do it. Listen to Leonardo. Okay, let's jump into these charts. Fascinating day. Stocks way down again. Gold down. Now again, we talked about a pullback. And of course, we've seen that happen in gold. But again, we'll go to gold in just a minute. Still looking okay, even with the down move for the day. Let's first jump into the S&P 500, down the most for the day, 3% more. Wow. When's the plunge protection team going to come in and save the day? Looks like we're going to have a big weekly vertical crossover. Again, we're only into Tuesday. Wednesday, Thursday, and Friday can be different. But we do see lots and lots of down movement. Big down candle just banging through what had been moving up weekly chart, just rolled over hard. Apparently all this coronavirus news we'll just continue to watch, but blew right through that weekly trend line. Go to the 2-day chart, and we see that 2-day chart had already crossed over going down back on Friday. And what a massive candle, pushing right down to the bottom of the Bollinger Band, the wick pounding through it, going from a derivative oscillator that was green to a derivative oscillator that is very, very red. So we'll continue just to see how far this will go. Go to the 4-hour chart, and of course 2 days of slamming down movement with 2 prior days of pretty good down movement. So again, hammering down. These markets are just hammering down. So that's where we are on the S&P by the end of the week. Right now, looks like we'll probably have a weekly vertical crossover and potentially a jumping in point. What about the Qs? The NASDAQ 100 down 2.72%. Getting closer. Looks like it's trying to cross over now. Hadn't shown that yesterday with the price percent oscillator pushing through the red signal line. Red down candle, not as strong as the S&P, but down nonetheless. And we see the derivative oscillator over to negative. Go to that 2-day chart. Of course, it will go ahead and we'll talk about that in just a minute. But we look at the weekly chart, we can see how, the 2-day chart rather, we can see how that has crossed over going down. Now, of course, what we're going to talk about is moving the trend line and the crossover. We're going to move those over. We're going to rotate our arrow 180 degrees down, and we're going to redraw our trend line. Now that we've had that confirmed crossover on the 2-day chart, again, happened a couple of days after the Friday crossover on the S&P, so we are now waiting for the end of the week to see if indeed, looks like pretty certain with as strong a crossover as that is, we'll probably have a crossover going down on the weekly. And of course, we look at that 4-hour chart and we see 4 days of down movement starting off slowly, really accelerating on Monday morning, and then again Tuesday afternoon. So markets are hammering down as far as stocks go. So we're going to leave stocks and go to bonds. We see that up 0.53% for the day. The 20-year bonds, TLT, we see a big green up candle pushing through the Bollinger Band. Price percent oscillator heading up. Derivative oscillator gaining upward momentum. That's the way the weekly chart looks on Tuesday. 2 days into a 5-day candle. The latest candle on the 2-day chart rocketing up. That price percent oscillator just Moving up into outer space, the derivative oscillator also gaining upward momentum. And we can go ahead and actually redraw our 2-day, try to capture a little bit more of that movement. I was hoping we could capture, maybe we can capture 3. We're going to try. Can we get close? Pretty close. That's better than the prior trend line. So we'll continue to watch, see how that happens. We go to the 2-day chart. And of course, we can see since we had that 2-day crossover going up, that was that recross going up in the same direction. That was our jumping in point on that 4-hour chart. And of course, we have seen strong up movement. In fact, in the morning and the afternoon on Tuesday, that's looking good. Bonds are doing what bonds are supposed to do as we see the market blowing off steam in stocks. So lastly, we go to gold. Gold down for the day 1.79% after a big up day previously. What do we see going on with gold? We still have a big green up candle moving up. It's lost a little bit of that energy on the price percent oscillator. Derivative oscillator's been losing momentum since it topped all the way back on the 31st of January. So we'll continue to watch, see how gold develops. 2-day chart shows us, again, a little bit of blowing off. We've got a longer wick on top, lost some of that candlestick body, but derivative oscillator still gaining upward momentum. Price percent oscillator still heading up. Look at that 4-hour chart. Some weakness there. We saw it blowing off some steam in the morning and then further in the afternoon. We'll see how gold shapes up as we continue to move out through the week. Keep a close eye on that 2-day and the weekly chart if indeed you're in gold. If you see a 4-hour crossover going down and that momentum sustains, then of course we're going to make the appropriate call on what to do about that. We still are in the profit margin, so we'll continue to watch on that practice trade, see how that continues to play itself out. Folks, that's where we are as we end the day on Tuesday, go into Wednesday. We have a good training for you on confirmation bias and how not to let that fool you into making bad decisions. Please take that training. You'll see it in your show notes. If you're not a subscriber to chartingwealth.com, easy to do. It's free. Go to chartingwealth.com, sign up. We so appreciate that. And we love to hear from you. Write us, cw@chartingwealth.com. If you're watching the video, please at the bottom of the screen, go ahead and subscribe to our YouTube channel. It helps us with our numbers. We so appreciate it. We do all of this for you, and we hope you make the most of it. Don't forget, in your show notes are links to the free PDFs. Those are the daily market worksheet, weekly market worksheet, and trade worksheet. You can fill that daily market worksheet out every day, and every time you do a practice trade, use the trade worksheet to help track what you're doing, why, and what you are learning. Very, very important. And you save all of this material so you can refer back to it. It becomes your trader's almanac. It's so very important. God bless, my friends. All the best from the whole team at Charting Wealth World Headquarters.